A few months ago, the Texas Attorney General sent a letter off to BlackRock and Larry Fink, the CEO, essentially saying, through a long list of grievances, we don't really like how you're managing our investments. And by our, they're talking about the Texas Retirement Pension Fund. And also because it's coming from the Attorney General suggesting, hey, you're not handling your role as a fiduciary properly. They decided to take it up now, but BlackRock's been on this track for a really long time, essentially saying it's not about shareholder value only. It's about all stakeholders, which is number one, the environment, number two, society in general. And when you break that down, you're talking about employees, customers, and so on. So what I really like about this discussion is, while they're kind of going back and forth about a fiduciary, what this is really doing is it's defining what capitalism really is.
It's a legal threat in a way to say you're not fulfilling your fiduciary responsibility. There's the threat of possible criminal, but most likely civil suit, etc., because it's coming from the Attorney General. And of course, the states included are oil producing states, not coincidentally. And I think the debate is really, Steve, about sustainable capitalism and sustainable profit, whether or not we can actually go on like this in the long term, or whether we only look at next year's report, next year's revenue, next year's share value, et cetera. And so what I like about what BlackRock is doing is they're essentially saying, look, we are executing our fiduciary responsibility. We are being capitalists here. And we're being capitalists because we're taking the long view to maximize our profits, in a la Warren Buffett, if you will. So I like the point that Fink made in his letter, which is that, part of our fiduciary responsibility is to hold the firms in which we invest our shareholders' capital to be accountable, to do what they say. And they've already signed on to these commitments for zero emissions and for climate change and so on. So do we not want the companies with whom we do business, do we not want the companies with whom we entrust our shareholders' investment to actually do what they say when they say, instead of paying lip service to sort of corporate accountability? Don't we want a tangible commitment? That's all about extracting value. We extract value in the form of share value, but we also extract value in the form of that shares. Those shares will still be worth something in the long term to benefit our investors, because the planet will still be here and life will still be worth living in this particular environment. So I like Fink's sustainable capitalism approach. He's basically saying we're diehard capitalists, and this is what diehard capitalists has evolved into. It's broader, it's wiser, and it's more holistic.
Yeah, for me, it's a modern day ant versus grasshopper fable. The 19 attorneys general, they collectively sent off the letter, basically saying we're the grasshoppers, maximize value right now for us, and let society handle the fallout. But and when you look at the responsibility of a fiduciary, it's to run the plan solely in the interest of participants and beneficiaries of the plan. And so, of course, an old school conservative 20th century view of that is shareholder value only. But what are the interests of the participants? It's not just the money, right? It's that we actually have a market that we can operate in. He said something really interesting on, I think it was DealBook, where he's saying, look, most of our investors invest for their retirement. And, that's a really long horizon. And he's talking about multi-generational sustainable wealth. So, yeah, it's this short-termism, which has been going on since the 70s, versus, well, how do we make this work for everybody?
This letter throws around terms like you're using ideology and political and social extremism to govern our investors' money, and not capitalism. Of course, Larry Fink deftly refutes that with purely Adam Smith type arguments, which is fantastic. But yeah. I think underscoring this is the distinction between the CEO as a leader and the CEO as an opportunist. Is the CEO essentially merely an administrator who executes the will of the shareholder, whether it's short term, whether it's wise, whether it's thoughtful, simply does what he's told, like a paid administrative assistant? and looks for the latest opportunity to act and post good numbers? Or is the CEO a leader that is more thoughtful, reflective, takes time to look at the long-term value, the sustainability of that value, the retention of value, the maximum value for the shareholder in terms of, as you say, the length of time in which they're going to have their money invested? So that underscores the question of, is not only is the CEO a leader, but is leadership in fact values-based? Is all leadership in fact values-based leadership? Because inevitably, it is the values of all of us, the values starting with, of course, survival and having a sustainable future for us, ourselves, and those we love, that are implied in Fink's action. Are values allowed to drive what we do? And are those values being essentially reduced in the minds of people who are articulating a doctrine of short-term value to ideology, when in fact the ideology is coming from those articulating the value of short-term value?